We are officially underway for trade this morning. Stocks fairly steady at the open, same as the case with yields, in fact. But we see shares sitting right near record highs, and investor sentiment has been strong. Adding, of course, to resilience that we've seen in this market is cooling inflation, as this morning's report showed. Expected earnings growth this reporting season and those ongoing rate cuts forecasted by the central bank. So, of course, it's natural to ask, what does this mean for companies interested in going public or IPOs? Well, joining me now is Matt Kennedy, Senior IPO Market Strategist at research firm Renaissance Capital. Matt, it's great to have you this morning. We had KinderCare IPO here at the stock exchange yesterday and a big IPO, Standard Aero, last week. What are the trends that you're seeing in the IPO market right now?
Right. So as you said, back-to-back weeks of large IPOs. It's a very exciting time. A lot of companies are thinking about going public. We're right now in the final stretch of the biggest stretch of the year where we get these companies targeting fourth quarter IPOs. We will have another brief period in November and December, but what we're seeing is a lot of companies really preparing for 2025 listings. It seems like we're going to have a fully normalized, healthy, active IPO market. We've seen that gradual improvement, that acceleration throughout this year, but all eyes on 2025 as well.
What are the sectors, Matt, that are gaining the most momentum, especially as rates come down and we head into 2025?
So we've seen continued issuance from biotechs, and private equity has been very active. So the missing piece of the puzzle here has always been the VC-backed tech group, that unicorn class that got those valuations just slashed in 2021. So we expect that to be really the biggest gainer in 2025. The reason for that is, so for the PE-backed companies, they're paying less in coupon payments now with lower interest rates. So that increases the valuations there. Makes sense. But with the VC-backed tech group, those valuations are also improving from lower interest rates because the value of their future cash flows increases. So it really, the lifting tide raises all boats, but the biggest gains should be from the tech unicorns.
How important are overall market conditions? I mentioned earlier the resiliency that we've seen in this stock market, investor sentiment strong, and finally those anticipated rate cuts that I think many investors and Americans, probably startup founders, were hoping for at the start of this year. But how does that really factor into a company's decision to actually tap the capital markets?
It's essential. Returns are one of the most important elements of an active IPO market. If investors aren't making money on IPOs, then you won't see any future deals. So the fact that markets are near all-time highs really does indicate a receptive stock market for new issues.
So to that end, Standard Aero, huge company, went public last week, as I mentioned earlier, listed here at the stock exchange. And according to your firm, Renaissance Capital, it was the first billion-dollar-plus IPO since that 2021 boom, fueled by low rates, to actually price above its range. What kind of signal does that send?
A very strong signal. And it tells you, I think that there's been a lot of attention on the VC-backed tech group, maybe less attention on the private equity-backed LBOs, the larger, more mature companies. But I think this tells us that there is demand for these types of companies. Standard Aero it was very large, a leader in its industry, improving profitability, growth rate was excellent, and a valuation to match. So when those elements combine, investors are interested. We've seen this year, the top 10 largest IPOs have averaged a 45% return from offer. So like I said, if investors are making money, then we expect IPOs to follow.
Interesting. So I'd be curious to get your take, Matt, just in terms of your overall outlook at Renaissance Capital, the firm's outlook on where the broader stock market goes from here, because of course we know that can drive the IPO pipeline.
Oh, I wish I had that crystal ball to tell you. One of the things is that, the stock market is unpredictable. So the companies that are going public right now, I think, are doing so because of the current conditions. We don't know what 2025 will look like. But up to this point, conditions have continually improved. We do often point to IPOs as being the canary in the coal mine, an early indicator for how future stocks may trade. So, that can tell us that there's more risk appetite right now, more demand for growth stocks, which is usually a good sign. But we'll need that to continue in order to see active issuance throughout next year.
Matt, I also want to end here by getting your take on how investors, how our viewers really can expect an IPO to perform after its debut. I know you've looked at a lot of data at Renaissance Capital as to what the traditional historical trends are, and what can you share with us?
I think it's important to always keep in mind that you don't need to buy on the IPO. You may follow the IPO market and see a deal that looks interesting. I would say put it on your watch list. Don't feel like you need to buy it on day one. And then we often look at that period from, 2 to 6 months after the IPO, maybe when some of the initial hype has died down, to look for an entry point. Some of these stocks can get very hyped up and then pull back a little bit. So you might find your entry point there. Looking at the top 10 largest deals this year, I mentioned that they had averaged 45% return. Half of that was from the first day, the other half from aftermarket trading, that post IPO follow through. So, investors are making money even if you can't get in on the offer price. But as the individual deal, yeah, I would say put on your watch list just the ones that you think look the best.
Matt Kennedy with research firm Renaissance Capital. Matt, thank you so much for joining.
Thanks.